A critical warning for the U.S. economy coming from a major credit ratings agency. We have the details coming up today on Business Matters. Good afternoon and thank you for joining me here today. I'm Don Ma. Okay, starting off with markets. Wall Street's main indexes closed higher today. It was boosted by a number of companies, for example, Tesla and other mega cap growth stocks. S&P 500 has rallied over 16% this year. But you know, investors are divided on whether this rally can sustain. Trading volumes are expected to be pretty light throughout the week, you know, with the markets closing early on Wednesday and of course shut all day for Thursday for U.S. Independence Day. Also, besides that, investors are also awaiting the highly anticipated jobs report this Friday. We'll have coverage on that for you as well. Okay, so the federal government is giving $500 million to tech hubs around the nation, and this is for new technologies like artificial intelligence, biotechnology, and quantum computing. The idea here is to spur innovation and create new jobs. So 12 tech hubs spanning 14 states, including Colorado, Florida, Georgia, will get a grant of up to $51 million each. One of these is the Tulsa Hub for Equitable and Trustworthy Autonomy in Oklahoma. So it develops and commercializes autonomous systems for anything from agriculture, for example, to transportation. And over the past 20 years, 90% of American tech jobs have gone to only 5 cities. The government hopes that this program can help boost the country's smaller tech centers. The Boston Celtics are putting the ball in anyone's court, and its owners are planning to put the NBA champion team up for sale. Just last month, the Celtics defeated the Dallas Mavericks in the NBA Finals to take home the franchise's 18th championship. The group Boston Basketball Partners is planning to sell the majority of its stakes in the team by early next year and the rest by 2028. The group bought the Celtics in 2002 for about $360 million. With more on their sale, we have NTD's sports correspondent, Dave Martin. So Dave, based on previous valuations, how much do you see the Celtics going for?
You know, if they sold the entire franchise, probably $5 billion. I mean, they were just valued by Forbes at 4.7 just a year ago, but there's only 30 of these teams around, so the chance to buy one doesn't come up at all the time. I think that drives the price up really even more. Of course, what billionaire doesn't want their own sports team to play with, you know? Especially with the way franchise values have gone up over the years. Now, you mentioned the Celtics were bought in 2002 for $360 million. 9 years later, around franchise values really took off in the NBA after the owners got what was considered a very favorable collective bargaining agreement with the players' union. You know, that deal gave the owners a 50-50 split of all revenue. Previously, the players had a 57% to 43% split in favor of them. So after that, franchise values really took off, and really each new TV deal that they've in favor of them. After that, franchise values really took off, and really each new TV deal that they've signed, which are in the billions of dollars, of course, all that revenue comes in. It also doesn't help or hurt that the Celtics have won more NBA titles than any other franchise with 18.
Well, let me ask a follow-up here. How much success or failure is an owner responsible for, and how much they really impact their team, you know?
A lot more than people realize. Obviously, they're not on the court. You don't see them there. You just see them in the owner's box. Success, though, I think is always from the top down in every kind of company, including these sports ones. Now, for instance, when this ownership group took over in 2002, just a few months after that, they hired Danny Ainge to be in charge of player personnel. He turned out to be an excellent choice. He was an excellent evaluator of talent. And for several years, he drafted well and built up some assets. And all of a sudden, in 2007, they went all in, traded them for all-stars Kevin Garnett, Ray Allen to team with Paul Pierce. A year later, they won the NBA title with those three leading the way. And then when their run was over in 2013, he traded an aging Pierce and Garnett to the Nets for future draft picks and pick swaps. Those turned into Jason Tatum and Jaylen Brown, who were the cornerstones for this latest team winning the NBA title. I mean, he really got the best of that deal, and they turned this team around very quickly. Now, Ainge retired in 2021, but ownership made another great move really by hiring then coach Brad Stevens to come in and replace Ainge. Stevens has been brilliant as well, bringing in several two-way players to complement Brown and Tatum. So who's ever buying the team, they're getting a well-run organization.
Well, David, I had another question for you, but it seems like we're running out of time here. I would love to hear what you have to say about the U.S. soccer team being eliminated, but that's all the time we have for you today. Thank you so much.
Well, thanks for having me, Don.
All right, some company news today. Tesla shares are up over 10%, and this is despite deliveries falling for the second straight quarter. Seems like the drop was smaller than expected for investors. This is actually the first time ever the electric vehicle maker has posted back-to-back quarterly declines. Tesla is the world's most valuable automaker. It is dealing with stiff competition in China and slowing demand as well. Consumers reportedly shifting to cheaper gasoline electric hybrid options, but Tesla combated this with price cuts and incentives. Tesla delivered almost 444,000 vehicles in the second quarter, and this was enough to beat out Chinese automaker BYD to retain the lead position in global sales of purely electric vehicles. If you got money in the market, you might own a little piece of Trump media without even knowing it. Former President Trump's media company has joined the Russell Indexes. Trump Media and Technology Group owns social media platform Truth Social. It's been added to the Russell 1000 index of large cap stocks and Russell 3000 indexes. Now, those indexes were tracked by several popular passive funds with billions of dollars in them. The addition went into effect on June 28th. When the indexes did their annual adjustment. And exploited foreign workers were reportedly found making handbags for luxury brands Armani and Dior. Italian investigators found production costs to be far lower than retail prices. Here's the story.
Italian investigators, while raiding factories, discovered exploited foreign workers making luxury bags for Armani and Dior. These luxury brands are known for high quality, sophisticated designs, and premium pricing. Simple handbags can sell for as much as $9,000. Investigators found that a Dior handbag priced at $2,700 costs roughly $57 to assemble. NTD reached out to Armani and Dior but did not hear back before airtime. Workers allegedly lived, slept, and ate at the workshop, working from dawn until after 9 p.m. That's including weekends and holidays. And to increase productivity, machines didn't have safety devices, according to prosecutors. Workers said they were paid the equivalent of $2 to $3 an hour. Luxury brands have high price tags partly because consumers expect skilled workers to make the products in professional workshops. But in actuality, many outsource production. These suppliers may face charges, but Armani and Dior will not.
And as I mentioned in the beginning, a warning for top economies, including the U.S. Credit ratings firm S&P Global warns that the U.S., France, and other economies are going to find it very difficult to rein in their national debt over the next few years. So the report estimates that the money the government takes in minus its non-interest spending would need to grow by about 2% of GDP, and this is something very unlikely given growth and spending projections. S&P says that only if it becomes too expensive for these countries to borrow money will they put a strict budget in place. But strict budgets are unlikely given that we are in election season. Now, at the meeting of central bankers in Portugal today, the chairman of the Federal Reserve also highlighting the USA's national ballooning debt. Have a listen here.
The United States is running a very large deficit at a time when we're at full employment, and it just is, the level of debt that we have is not unsustainable. The path that we're on is unsustainable. That's completely non-controversial.
Now, Powell also stressed that he was talking more broadly about deficits and not making any suggestions on specific policy. Powell also suggested that the Fed is not yet satisfied with the pace of inflation in the U.S. Many expect the Fed to step in and try to stimulate the economy this year by cutting interest rates. But Powell suggested that this wasn't on the agenda right now, as doing so could make it harder for them to tackle the inflation problem. And of course, ahead of the 4th of July holiday, the federal government has wrapped up the sale of 1 million barrels of gasoline from a strategic reserve. And the government is trying to lower gas prices heading into the summer driving season. And according to AAA, gas prices are down 5 cents. From a year ago, the average is $3.49. The cost of gas could start ticking up, though, because of a jump in crude prices. And a federal judge has blocked a recent Biden administration action on LNG, or liquefied natural gas. The government had paused licenses for exports of LNG to non-free trade agreement countries. But a group of 15 states led by Louisiana sued to reverse the pause. They argue that the Department of Energy's pause violated a federal law, calling it completely without reason or logic. The Louisiana Attorney General hailed Monday's ruling as a victory for American energy, emphasizing LNG's role in providing jobs and clean energy. So the Biden administration had imposed the pause in January to assess climate impact and economic factors. So the old problem of cheating students now has a new face, and that is artificial intelligence. A recent study found that AI-generated cheating went undetectable 94% of the time. NTD's Sean Marshall has more on this.
A study of one bachelor's degree in psychology found that exam papers completed by artificial intelligence software went undetected 94% of the time. The study was conducted at a reputable UK university. The study also found AI scored half a grade higher than the average student 83% of the time. Alina Adams of NYC School Secrets gave a teacher's perspective.
We're talking about looking for modern solutions to this modern problem, but maybe it's the exact opposite. Maybe we should fix this modern problem, which is really an ancient problem, with some ancient solutions.
Ancient solutions to modern AI cheating could be methods like oral exams, debates, and assignments written by hand. Bans on using AI like ChatGPT have proven to be difficult, according to the new study.
The current methods that are in place to detect AI cheating are the same methods that have sort of always been in place to detect cheating. Does this feel like the student wrote it?
I asked Adams if students are cheating with AI because teaching methods and assignments haven't kept up with technology.
What I think they haven't done is explore alternatives. For instance, it's very hard, or at least harder, to cheat with AI if you have an oral exam, if you have an in-class writing assignment.
In the study, it's stated that students would most likely modify the AI output to make it even less detectable. Sean Marshall, NTD News.
Okay, let's take a short break now. Coming up, major Western banks in China cutting jobs due to falling profits. That includes Goldman Sachs, Morgan Stanley, and more. Also, what poses the biggest risk to China's financial system? And can Beijing stop a systemic crisis? We'll discuss this topic after the break. Don't go away. And welcome back. We have some China-related stories for you. Major American banks have slashed their investment banking workforce in China. And this is according to a report by the Financial Times. The cuts last year came after 5 out of 7 Chinese securities units either reported a loss or a drop in profits in annual reports. In all, the units employed about 1,800 people last year. This is a 13% decline from the previous year. The 2023 figures are in sharp contrast to 2021. That was a record year for investment banks around the world, and when all but one of the 7 units made a profit in mainland China. Microsoft is responding to reports that it's closing its network of authorized physical retailers in mainland China. Microsoft has confirmed that it is, quote, consolidating its retail channels in China. It seems to suggest that it's scaling back its retail presence there, but it would not confirm nor deny store closures or say how many stores would be impacted. Now, in a statement, Microsoft did say that it continually assesses its retail strategy to meet the evolving needs of valued customers. The company added that the products will still be available in China at retail partners and through its website. Now, given its economic challenges, is Beijing worried about a systemic failure in its financial system? Well, it's moving closer to unveiling its financial stability law, so that may be some indication at least of its concerns. Now, a key priority of the law is the establishment of a financial stability guarantee fund. This fund aims to rescue troubled Chinese financial institutions to prevent systemic financial risks. Now, the exact size of the fund has not been officially disclosed. It is eventually that the fund is expected to raise the equivalent of $16 billion to $24 billion each year, analysts said at China Securities. China's financial system currently faces multiple challenges here. For example, an ongoing property crisis and a sluggish economic recovery, as well as the system also threatened by some $9 trillion of local debt. The question really here is China's Financial Stability Guarantee Fund substantial enough to stop any dominoes from falling in the country's financial system? Well, I discussed this with the chief strategist at Macrolenge, Brian McCarthy. Here's what he says. Okay, Brian, thank you very much for being here with me. So, first of all, I don't want to assume here, but after this new law is announced, is there anything that's posing systemic financial risks to China right now?
Well, I think the asset deflation that they find themselves in ultimately does pose a systemic financial risk. However, as I and many others have said for quite some time, this was never going to play out in a Lehman-esque fashion because, if you look at what happened in the U.S. and Europe in 07, 08, counterparty credit fell apart. That destroyed liquidity in the system, and you had sort of a series of dominoes of failing institutions. That won't happen in China because the banking system, the vast majority of it, is the state. So you're never really going to have counterparty risk panic like we did in the West, because all of these institutions are part of the state and feel like they're under the same state umbrella.
Okay, so what, in your opinion, is the purpose of setting up this Financial Stability Guarantee Fund?
Simply to underscore that the state is not going to let the banks fail. But, they're raising, the fund is going to be funded by assessments on the banks in terms of addressing systemic risk in the system. So like the Financial Stability Guarantee Fund they're setting up, they're talking about 180 billion RMB, which is a spit in the ocean. This is a 60-odd trillion dollar financial system. But, you're making assessments on other banks. That's fine if one bank has an isolated problem. You can tap the other banks to pay for it. But in a systemic issue, everybody's got the problem. And that is what China is facing in the wake of the housing bust. And like systems in the West, the only thing the government has to address a systemic problem is the central bank. This is probably a 2025 story. Their ability to sort of extend and pretend, I think, will be running out in a year or 18 months, if I had to guess.
Right. Okay. So you mentioned China's property sector right now. Is there a risk there that could pose systemic problems? How exposed is China's financial system to the property sector?
Well, without even getting into the fact that we are starting to hear what I'll say jingle mail anecdotes, but the developers have $8+ trillion in debt. About a quarter of that is a little more is bank loans, but banks also have exposure via bonds, and they have indirect exposure to the other entities that are exposed to the developers. So, again, the developer debt writ large, 8 trillion, easily half of that could go belly up. So, this is the early stages of a multi-year debt deflation process in China, the losses will ultimately be tallied in the trillions of dollars.
That's all the time we have for today. Thank you very much for coming on today, Brian.
Thanks, Don.
All right, one more story I'll mention here relating to China. The Biden administration is ramping up pressure on Chinese telecom giant Huawei, reportedly revoking 8 export licenses this year to curb shipments to the company. And this comes from a document seen by Reuters. Entity was, though, unable to independently verify it. The Commerce Department said that it had revoked certain licenses, but it did not specify the name or number of suppliers that were impacted. Licenses for Qualcomm and Intel were among those revoked. The details shed new light on measures the federal government is trying to thwart Huawei. The U.S. considers Huawei a security risk. And last August, Huawei overcame U.S. export restrictions by launching a new phone powered by a Chinese chip. It then saw a 64% spike in smartphone sales in early 2024. Huawei's smart car components also boosted its revenue, marking its fastest growth in 4 years by 2023. And it's your last chance to get forever stamps at their current price, because a first-class forever stamp will soon cost 73 cents. That's a nickel more than the current 68 cents. Prices for other services are also increasing, including postcards and metered letters. The new prices will take effect on July 14th, and the hikes are part of the USPS's 10-year Delivering for America plan. It is expected to generate $44 billion in additional revenue by 2031. And finally, a new study shows why having more female managers in the workplace is good for business. So researchers at Harvard Business School found that female managers are better at building rapport with teams made up of men and women, and this leads to better communication and better organization, and in turn, better production. So the study found employees seemed happier and were less reluctant to leave their jobs because women are better than men at creating schedules and looking for workers' interests. Researchers found that when men managed other men, they also had good results. The same was true when women managed other women, but the study found that when men and women work together, it is best to have a woman in charge. What do you think? All right, that's all the stories we have for you today. Thank you so much for watching. If you have any feedback at all, please feel free to let me know. Email us at business@ntt.com or leave a comment online. I do read them. And as I always say, business matters. See you tomorrow.